Hello, everyone. We'll give you a minute to get in and get settled, and we'll get started in just a moment or two. Hi, everyone. Looks like we are right about at 7 o'clock, so I'm going to have us get started. Good evening. My name is Callie McCune, and I'm the Public Programs Manager at the Indiana Historical Society. Welcome to our last conversation in the Living the Legacy series, Creating Equity Today. I'm so glad to have so many of you on our call tonight. The Indiana Historical Society collects and preserves Indiana's unique stories, bringing Hoosiers together in remembering and sharing the past, and inspires a future grounded in our state's uniting values and principles. Here at IHS, we use collections and programs, exhibitions, and publications, and more to contextualize history. And so our Living the Legacy series is a group of free interdisciplinary community conversations on the history of redlining in Indianapolis. Tonight's program is the last in our series of conversations connecting to our Indianapolis Bicentennial exhibit. This series has been made possible through a grant from Indiana Humanities in cooperation with the National Endowment for the Humanities and from the Indianapolis Foundation, a CICF affiliate, and with support from Lake City Bank, which is now offering in-person and mobile banking. I also want to give a big thank you to our steering committee who helped us to cultivate these conversations, questions, and resources. We've had a dream team of advisors who have helped to make these conversations possible. And I so appreciate their time and their expertise to make this happen. You can see their names and the organizations that they're from up on the screen right now. And a few of them are even going to speak with you tonight. We're happy to report that this event is part of the 2020 Spirit and Place Festival, an arts, humanities, and religion festival that happens every year in Indianapolis, though not always as virtual as it is this year. It's appropriate, though, that this year, in the year of both the start of Indianapolis's 200th birthday and the festival's 25th anniversary, that all of our events are examining origins. We're excited to be included in the festival as we examine the origins of racist housing practices in our city, and hopefully maybe find some remedies for equitable solutions in the future. So we're going to hear a few words from Spirit and Place's Program Director, Erin Kelly.
Welcome to the 25th Annual Spirit and Place Festival, the nation's only arts, humanities, and religion festival. My name is Erin Kelly, and I'm the Program Director for Spirit and Place. We know this year's festival is different than other years, but you're here, we're here, and that's what matters. We'd like to begin this festival with a new practice, that is acknowledging that we are standing on the traditional homelands of the Miami, Potawatomi, Shawnee, and others, people who were unjustly removed from this land. Our origin story as a community begins with them. We also want to thank our sponsors who helped make the festival possible: Lilly Endowment Incorporated, Allen Whitehill Clues, Bolson Group, the Indianapolis Foundation, a CICF affiliate, and the IU School of Liberal Arts at IUPUI. We hope you enjoy the variety of events exploring this year's origins theme. You can learn more about all of the festival events by going to spiritandplace.org. By going to the website, you can also read our community agreements. And these are agreements that we hope you will use to help structure a respectful and mindful festival experience. By visiting our website, spiritandplace.org, you can also take an online survey and tell us what you thought about the event you attended. We rely on this feedback to guide our work and strongly encourage you to go to spiritandplace.org to tell us about your experience. Thank you for supporting Spirit and Place, and have a wonderful festival.
So we're really excited to be part of Spirit and Place, and that they are supporting us in the work that we're doing at IHS and with all our partners, and even nominated us for an award of awesomeness. So thank you all for attending our awesome event. But lastly, before I toss the mic over to Jordan Ryan, I want to give you a few pieces of logistics for tonight's event. Whether you've attended any of our previous discussions or joining us for the first time, or hey, they're out in Facebook land, we want to make sure everybody's up to speed on what the historical context is of redlining. And I can't think of a better person to do that for you than Jordan Ryan, archivist at the Indiana Historical Society and mastermind and my partner in crime behind making these events possible. Once Jordan gives you a little bit of info and we see a short video, they'll toss it over to Andy, our moderator, and our panel will introduce themselves, their works, and how they connect to this topic. At the end of the program, we'll have time for some audience questions. If you do have questions as we go along, please drop them in the Q&A box. I've circled it on the slide that you're seeing right now. We'll keep an eye on those and make sure we get to as many as we can. And we know you're all muted for this event, but we do want it to be a conversation. Please utilize the chat box as we go along. Make sure you're replying to our panelists and attendees so everyone can see your reply. And lastly, but not least, not only are we live on Facebook, but this event is being recorded. You can catch the replay on our website in upcoming weeks. As part of this program, we are putting together a toolkit of things to read, listen to, and get involved in to create more equitable housing practices in Indianapolis today. Keep an eye on the chat box. I'll be dropping URLs as we go along, and then we'll be able to send those to you in a follow-up email tomorrow. And we're collecting all of those resources into a toolkit that is coming soon to you. So before we dive into the history, I'm going to launch a brief poll. This poll is helpful for us for our grant evaluation processes, and we want to get an idea of what you know before we get started, and we'll ask you again at the end of the program. Our question tonight is redlining still happening today? So feel free to put in the poll or add that to the chat if you're on Facebook. We'll kind of bring everything together. But it looks like most of you say yes. So I'm glad that you all are coming with a little bit of knowledge to our event. So with that, I'm going to toss this over to Jordan Ryan, archivist at the Indiana Historical Society, to get us started.
Thanks, Callie. As Callie mentioned, this is the first program in our series to kick off the Indianapolis Bicentennial Collecting Initiative and Exhibit. So this is the last program in our 4-part series. For those who have been following along, and for those who are joining us for the first time, I just want to summarize the first 3 programs. So the first program was a lecture and a moderated conversation with Professor Nathan Connolly discussing the national context of redlining in his book, A World More Concrete, Real Estate in the Remaking of Jim Crow, South Florida. You can catch the video on our website. Our second program was a moderated panel discussion with local experts of various disciplines on Indianapolis redlining, centering the conversation on our city's experience and challenges. You can watch the Facebook stream on the event page. And our third program was also a moderated panel discussion with a local architect, planner, and transit expert discussing the ways in which redlining policy has negatively impacted the Indianapolis built environment. That Facebook stream is also available on the IHS Facebook page. So now we're going to pivot and show a video from the Fair Housing Center of Central Indiana on the history of redlining and other related historic racist housing policies. Keep in mind that if you need captions, the YouTube link to the video has captions, and we will drop that link in the chat.
Part of section occupied by lower type Negroes. Portion is desirable residential neighborhood for better class Negroes. Almost solid Negro. Number of older German type citizens near Lutheran churches and schools. Very old type houses becoming occupied on the east portion by Negroes. Cheap class of property and citizens. Remarks like these were often listed on the Homeowners Loan Corporation map issued in 1937 for the city of Indianapolis. These city maps were created as part of a government-backed program that graded neighborhoods into 4 categories based in large part on their racial and ethnic makeup. Areas designated in red or yellow have the lowest ratings, while areas in green or blue have the highest ratings. Nationally, neighborhoods with minorities, Catholics, Jews, or new immigrants were marked in red, deemed undesirable, and given the lowest score. This later became the basis for the term redlining. These redline neighborhoods were areas that were viewed as high risk for new government-backed mortgages and mortgage lenders. This majority white Indianapolis neighborhood was labeled native white, executive, and other white collar type, and given the highest green score for investment. A nearby majority white area was marked as blue, noting better class of Jewish race and no Negroes. Similar maps were issued for the cities of Evansville, Fort Wayne, Gary, Muncie, South Bend, and Terre Haute. Many do not realize that it was these government-backed programs and policies that caused today's neighborhoods to remain segregated and often high poverty. Let's explain. The federal government and private lenders denied minority communities access to good mortgage products that dramatically expanded opportunities for home ownership for whites. Unfortunately, these redlining effects lasted most of the 20th century. On top of redlining, restrictive covenants were used to ban the ability of people of color to purchase homes in many white neighborhoods. Here in Indianapolis, several white neighborhoods had such restrictions, often using language like, "No person or persons of any race or mixture thereof other than white race shall own, use, or occupy any lot herein, except in, however, a domestic servant, not of the white race, may occupy room or rooms with a tenant or owner belonging to the white race while in the employ of said owner or tenant." Discrimination in rental housing was also a major issue, further restricting housing access for many hardworking citizens. Although the U.S. Supreme Court eventually ruled these covenants were unlawful in the 1948 case Shelley v. Kramer, many continued to be unofficially enforced for several more years. The damage had already been done and would impact integration for generations to come. Back to redlining. The subsequent government-backed programs expanded access to mortgages and made them much more affordable. In the following decades, they assisted millions of white families in obtaining the financing necessary for home ownership and to gain wealth that white families who benefited have been able to amass and hand down to their children and grandchildren. However, minorities were systematically excluded from these programs. The imbalance created by redlining left minority communities with scarce options. They became subject to predatory and discriminatory land contracts that denied them the same opportunities white families had to accumulate wealth through housing. In white neighborhoods, the prospect of integration was used as a threat. Homes were then purchased at discounted rates under the guise of helping white people out before their homes lost too much value. This process was called blockbusting. Predatory entities then turned around and sold these houses to minorities through exploitive, one-sided land contracts. They also purchased homes in black neighborhoods for the same purpose due to the lack of credit available. Sales prices were unjustifiably inflated and interest rates were exorbitant, much higher than white buyers paid with their government-insured mortgages. Land contract buyers gained no equity, no matter how much they spent on their monthly payments and improving their homes, unless they made it all the way to the end of these predatory contracts. But most of them never did. It was a steep uphill battle designed for their failure. A 2019 report out of Chicago noted, over the 2 decades studied, the amount of wealth land sales contracts expropriated from Chicago's black community was between $3.2 and $4 billion. Today, we continue to see the harm of these discriminatory practices from over a century ago. The same red line neighborhoods in Indianapolis remain heavily segregated and often with lower incomes. These neighborhoods still lack jobs, banking branches, adequate sidewalks, and are often riddled with vacant homes that were foreclosed upon. The predatory lending of the foreclosure crisis added to the historical problems. An often bigger loss to those shut out of the home buying process is the inability to pass down the knowledge of homeownership to their children. With redlining and other forms of lending discrimination still happening today, there is a significant gap in home ownership between whites and people of color. There's still much to be done, but organizations like the Fair Housing Center of Central Indiana are working to stop discrimination in lending and ensure equal housing opportunities for all. To learn more, visit fhcci.org.
I want to thank the Fair Housing Center of Central Indiana for allowing us to share that video tonight. So there's a lot of information in that video that provides context for what we're talking about tonight in terms of contemporary barriers to home ownership. But first, let's center this conversation a bit with history in the archives. So again, what is redlining? I define it as the discriminatory practice by which banks, mortgage lenders, and insurance companies refused or limited loans, mortgages, and insurance within specific geographic areas, particularly in older and inner city neighborhoods, to non-white and or low-income families by guidance of the Federal Housing Administration's Homeowners Loan Corporation. In addition, realtors and real estate developers misrepresented markets and discriminated against prospective homebuyers in order to control market values. So redlining has created this cultural and financial dynamic that favors white homebuyers while creating an adverse effect for racially oppressed people. Here you can see the map for how Indianapolis was redlined. Again, green means best, blue is still desirable, yellow is definitely declining, and red is considered hazardous. So a few reasons for the HOLC devaluation, AKA being redlined. You want to go to the next slide. Some things included the type of resident. So that means their race, nationality, immigration status. Other times you see a devaluation due to the structures themselves. That tends to be the type of housing, the age, or the material of the housing. But other things like market values, assessment trends, and even proximity to industry and floodplains come up. With my work as an architectural archivist, I see a lot of documentation that highlights disinvestment and later complications as communities are displaced for vast redevelopment projects. Although these high-level topics are not always explicitly stated or obvious, they're there in the archival materials. The consequences of redlining are expansive and compounded by numerous inequitable housing and development policies that are enacted at the federal, state, and local levels. We see the impact of these policies in today's issues, including the racial wealth gap, declining homeownership rates, eviction and foreclosure rates, neighborhood disinvestment, and other infrastructure challenges. We can also layer different types of data and maps on the redlining map and see other similar connections. For example, this is the 1945 urban renewal sites overlaid. All 6 sites are located partially or entirely in the red and yellow devalued areas. We can also look at the highway system route, particularly the 6570 inner loop. That route is almost entirely in red and yellow devalued neighborhoods. But this trend doesn't stop historically. Recent data from Savvy shows gentrified areas overlapping with many of these devalued neighborhoods. If you want to learn more about the gentrification study, check out the link. I'll drop the chat in the report. You can also look at this in eviction data. So this is the 2016 eviction lab data rates. Larger dots represent more evictions, and they're predominantly in the red and yellow devalued areas. And again, with recent opportunity zone legislation, we have a concentration of these areas overlapping in previously redlined neighborhoods. So what am I trying to say? None of this data is particularly unique because this is all happening in major cities throughout the country. There's still much work and scholarship to be done on the issue, and I hope I visualize some of this accumulative and lasting negative impacts that redlining and other intentionally inequitable policies have had in Indianapolis. You know, the city will be shaped by historic moments around us today: the 2020 pandemic, police brutality, racial inequality, our national housing and eviction crisis. You know, these all stem from historic policies, and the future is uncertain, but onward we must go, speaking our truth, and we can learn a lot from history in solidarity. And with that, I'm going to hand the program over to Andy Beck, a dear friend, for our panel discussion. Thank you.
Thanks, Jordan. Before we get started with introductions tonight of myself and the panelists, I want to acknowledge Jordan, Callie, and the rest of the team, the Indiana Historical Society. I encourage all you attending to find and watch the 3 previous sessions in the series. The previous participants were all experts in their field, and I learned a lot from attending those. These conversations are so important, understanding why our cities and neighborhoods are the way they are, from housing to historical and modern day segregation, transit systems, differing levels of opportunities, economic and cultural displacement of low-income residents. These conversations analyzing policies and their effects, and the anecdotal data of stories are crucial to understanding current racial disparities. As Jordan said, my name is Andy Beck. A little bit of an introduction. I'm a project manager for the Westside Community Development Corporation, and I'm also the Community Land Trust Outreach Coordinator for Kepler Institute. I recently completed a master's degree in urban design from Ball State University. I'm a founding member of Homes for All Indy, which is a program of Kepler Institute. A little bit about Homes for All Indy and our core values. We intend to strengthen tenant rights through organizing low-income renters. We have built a citywide community land trust coalition to advocate for permanently affordable development that is collectively owned. Both of these core values advance our belief in development without displacement. Our perspective is that housing is a basic human right, and the commoditization of housing harms low-income communities. I believe that our development projects should prioritize existing lower-income communities rather than marketing development to new residents. And with that, I'll pass it on to Diana. Would you please introduce yourself?
My name's Diana Rice Wilkerson. I am a loan officer with Fairway Independent Mortgage. And I've been in the lending business for over 30 years now, and I started on the banking side. I was probably the first African-American loan officer for Indiana National Bank back in the early 80s. And through my career, I have not only originated, but I've also processed, kind of learned the business from the inside out, eventually managed underwriting, and there got involved in developing a mortgage loan product that served the low to moderate income borrower, because working for a bank, we were obligated to lend in low income communities and serve all communities where we had a presence. And that kind of just, I think, just resonated with me to the point that that became my niche. I went on to work at the Indianapolis Neighborhood Housing Partnership, where I was their director of mortgage programs. Went to Habitat for Humanity. For 3 years, I was their executive director, where we built 25 homes in 25 days, celebrating the 25th year of Habitat. And then after that, I was completely exhausted. So I took a year off and decided that I really wanted to get back in touch with the homeowner, the borrower. And so I went back into origination, which is where I've been for the last 20 years.
Okay, next introduction. Could we have Janice, please?
Janice, you're muted. You'll want to unmute yourself in the bottom left-hand corner, please.
I don't know. I think it was a ghost in the house because I don't know how it happened. Good evening. My name is Janice Bradley. I'm with JB Real Estate Consultants. I have been a real estate professional for 40 years this March. Background, actually, I worked at Indiana Bell. So those of you who know Indiana Bell know that I've been in here. I've been here on this earth for a minute. Started the business. I just absolutely found out I had someone who was a realtor that worked with me, and I don't know what happened. It just popped. It just said, I think I can do this, and it's just hit my heart, and that's something I've been loving to do. Actually, when I got into business in the 80s, redlining and blockbusting has really been pretty much exposed. So I really didn't get right into that kind of situation where I had to kind of be very careful. It was very much exposed, and it just kind of probably helped me do a better job just simply because of being more and more aware. Let's see, I was the first minority director of the board, my board, which is the Metropolitan Board of Realtors. Very proud of that. Also, was one of the first to actually start the company with RE/MAX. RE/MAX was when it came new to the city of Indianapolis. I was the first to belong to that. And then later on during the years, I was a co-owner of a RE/MAX called RE/MAX United in the Pyramids for a short while. So I've had a lot of background in real estate. Like I said, this is something I really like to do. Currently, I love to do, let's put it that way. I have a heart for home ownership. Growing up, I did not have a home. We did not have a home growing up. And, again, I was just exposed from where I was working to home possibilities and decided I could buy this. I could buy a home, and that's my family did do that. Very proud that my children have owned 2 and 3 homes, all my sisters and brothers. So, it's just in my blood. Currently, I have been blessed to work with INHP INHP is definitely trying to get into in the Riverside area where where it's up and coming. So I list their homes in Riverside. Very, very, very proud of that. There's not a home that we have listed that we have not sold in a very, very short period of time. We'll probably talk a little bit about what INHP is doing also to help the low to mod income get into different homes. Let's see. I think that's probably about it. Oh, I will mention, Diana didn't mention it, but Diana and I both are co-hosts of a radio show called Home and Finance. Actually, that's 18 years of our lives. So we have been doing this. Absolutely love it. It's a community, it's a ministry for us. And our slogan is straight talk, because we really want the community to understand what's going on with the home ownership, with financing, expose them to things that they never knew. I mean, they didn't know that they could buy a house after bankruptcy. They didn't know they could buy a house after foreclosure or short sales or things of this nature. We also have been blessed to be a co-host on Channel 40, and that just started October the 20th. So we're on Tuesdays for a half an hour, and that has obviously been a real blessing to us.
Amy, please.
Thanks, Andy. Amy Nelson, and I'm the Executive Director of the Fair Housing Center of Central Indiana. The Fair Housing Center is a nonprofit advocacy-based organization based here in Indianapolis. Our service area is about 24 counties here in Central Indiana, but we're the only nonprofit advocacy organization working specifically to advance fair housing in the state of Indiana. So because of that, we sometimes venture outside of our Central Indiana area when our resources allow us to do that. We are a small group of only 5 full-time staff, but we try to advance fair housing as best that we can. And we do that mainly through 4 main programs. One is our advocacy program, which is really the backbone of our work and what is going to be the bulk of our discussion here tonight. This is where we conduct investigations to determine if there is evidence of unlawful violation. So this could be somebody contacting us to complain about what they may have experienced. But it may also mean where we conduct what we call systemic-based investigations. So we don't just wait for the discrimination to be reported to us. We go out looking for it as well and build cases to stop those types of systemic-based practices. And when it comes to lending discrimination, very often we have not had a complaint about a particular experience. It's through our systemic investigations that we have been able to uncover alleged violations of law. We also have an education program. We do a number of free events throughout the year. We also have an annual conference, publications. We're very active on social media. We're active on public policy, particularly within the State General Assembly, some of which we may also talk about a little bit tonight, some of the barriers there. And then we also have an inclusive communities program, whereby at different times we've been able to either negotiate resolutions that have allowed us to give grants or require respondents to make donations to groups or areas that were impacted by the harms of housing discrimination. And through our various types of work, we continue to explore other ways that we can work to address housing-based discrimination. We got up and running only in January of 2012. Before that, there was not an organization working here in Indiana, which is kind of shocking. Ohio has 7 groups. Michigan has 8, and Illinois, Michigan has 6, and Illinois has 8. Yet we're the only group here in Indiana and only got up and running in 2012. And with that, I'll turn it back over to Andy.
Thanks. And Amy mentioned active on social media. Do yourself a favor and follow Fair Housing Central Indiana on Facebook and Twitter. And in order to stay engaged on some of these issues, also please find Homes for All Indy on Facebook and Twitter. Keep up to date. We'll get into the questions. Our first question is, what historic impacts have you observed from redlining, racial covenants, and other inequitable lending policies over the last 100 years? don't have a volunteer. I will call on you. Can we get Janice to handle this one first,
That's kind of a lending question. So that sounds like Diana Rice Wilkerson.
Okay.
Yeah. Hey, I show houses. Diana shows them the money.
Diana, you're muted.
And I can jump in too if needed.
From my perspective, I mean, I got into the business in the late 70s, early 80s. So a lot of laws were, just coming on the books. But clearly, there was redlining and that sort of thing going on in lending. Fortunately for me, what I focused on mostly at that point in time was the consumer lending side versus the real estate lending side. So I was learning how to lend money, and I was becoming familiar with the fact that the bank was going through a transition on retraining everyone and trying to set policy and revamp policy so that we were not guilty of those practices. But I personally myself did not ever knowingly make a lending decision based off of the location of the real estate. I do have other examples of where I think that the guidelines themselves about lending were so strict or so conservative that kind of kept low mod families and certainly minorities out of lending, but not that in your face redlining. I did not have that experience, but I'm very aware that that was practiced.
Yeah, and I will, certainly jump in. The video highlighted certainly some of that history, but when we're looking at today's impact, one of the most significant areas we see is in the differences in the home ownership rate. And the video that we had put on certainly alluded to that. But to just give our audience just a little bit of an idea, currently the home ownership rate for Blacks is 40.6%. That is lower than when the Fair Housing Act was passed back in 1968, which banned discriminatory lending. It's also lower than in 1934, when really our modern day home financing system began with those initial, redlining maps. There's such a glaring gap in the home ownership rate between Blacks and whites, Hispanics and whites, Asians and whites. And a lot of that still comes from those historic policies that barred so many Americans out of their ability to become homeowners if they wanted to do that.
Yeah, you're absolutely right, Amy. That's been shown quite a bit in the state of home ownership from NAREB, which is the National Association of Black Realtists, let's just say that. So they do a good job of sharing that kind of information.
And do you all have any specific examples of those historic policies in Indianapolis? Any neighborhood observations, individual stories, or anecdotes?
Sure. So, my organization, as part of our research and putting together the history of redlining video, and then we're also working on a history of sales discrimination video. Certainly in Indianapolis, there were a number of barriers that were put in place over really starting back in the 1910s and then moving forward, where you saw not only the government programs being put in place here, but you also saw forms of different sales discrimination through racial covenants that were put in place. Just dozens upon dozens of neighborhoods had racial covenants that restricted the ability for Blacks to be able to purchase homes in those neighborhoods. We also saw here in Indianapolis, which has been discussed in a previous webinar, that Indianapolis tried to, back in 1925, I believe it was, tried to pass an ordinance which would have allowed white homeowners to decide if Blacks could move into their neighborhoods. It was a way of trying to get around in some Supreme Court cases that were going at that particular time. But we also saw just hardcore harassment. Paul Mullins spoke about this, certainly in a previous webinar as well, but spite fences being put up, constructed around a Black homeowner's home by the white homeowners, these tall fences. we saw harassment. There was a report of a grenade being thrown into the home of a Black family who had moved into white neighborhoods. Other forms of vandalism, certainly occurring throughout the times. So it was pretty extensive and occurred over decades. And that type of harm simply doesn't recover overnight.
When we talk about historical redlining, it was a specific policy, but those policies are still unofficially carried on today. We hear stories about them. Wanted to ask you your knowledge of quote unquote redlining happening today. Where do we see it? Are cases still being filed, legal cases, housing discrimination cases, et cetera?
Well, I'll start, and then the other two can certainly jump in because this is an area obviously that my organization works on. Here in Indianapolis, there's been 2 cases that have reached some form of resolution that involved allegations of redlining. One was a case from about 5 years ago, and then another case was reached resolution last year that my organization was involved in, along with the U.S. Department of Justice. So both of them allege, redlining as well as other forms of lending-based discrimination as part of that. And that can be where loans just aren't being made within Black neighborhoods, or that African Americans or Blacks are applying and not getting approved for those loans, even at higher income rates. We also might see it in bank branches only being in white neighborhoods, but not in our neighborhoods of color. So it's very prevalent here today, and I'll drop a link in the chat to our advocacy page, which is where we list most of our fair housing cases, at least our larger cases, so that the public can view the work of the Fair Housing Center, as well as the resolutions that we try to seek to get community or individual relief as well.
Amy, I was looking on our listing contract, and I know that we really had to pay attention to this when I first got into the business, and actually it is part of the listing contract when it says the parties acknowledge that the Fair Housing Act prohibits discrimination in housing because of race, color, national origin, religion, sex, familiar status, and handicap. And I think I can remember when I was maybe talking to somebody on the phone for a possible listing because they called me. And to be perfectly honest with you, they might have made that kind of a comment. It looks like my internet is kind of acting up a little bit, but where they did not want to sell to a minority, in any way, shape, or form. And of course, I had to share with them that I could not list their property, and things of this nature. So I'm not sure how much I'm against or run across that, but they do have to sign. They do have to sign that as a listing contract when a person lists their homes for sale.
And I was just thinking too, with the National Association of Real Estate Brokers, we have a local chapter here in Indianapolis. And one of the things that we did annually was celebrate trailblazers. And those folks were typically people who had been in the business, lending and both the real estate side for years, and broke through a lot of barriers to further home ownership among low, moderate families as well as minorities. And many of those brokers were able to tell stories, outright stories where they couldn't show houses because their clients were African American. They did finally close on a property, and possibly the new homeowner was harassed in the community, kids maybe being harassed, crosses being burnt into the yards. And this has not been that terribly long ago. So
right.
Really, on the heels of a lot of that, what I've seen on the lending side, I don't see that, what you guys see, Janice, especially as realtors. But what I have seen on the lending side is I've seen more of the policies changing, which are really hindering minorities from becoming homeowners. So it's not so overt as redlining, but when you have income guidelines that are pretty restrictive, like we apply a a debt ratio guideline across the board, and it doesn't take into consideration, and it's already known that lower household incomes have to pay a higher amount for decent housing. But you know, that family who may have an experience in paying that higher amount for housing, if their debt ratio doesn't fall into a box, even though they've proven, you know, for years that they can manage that obligation, they may be denied home ownership. So we did go from, on the lending side, we did go from a lot of subjectivity in the lending decisions when it came to underwriters making decisions, which is where you could really delve into the application, and you just, you know, more susceptible for those decisions to have some bias in them. Now 90%, I feel, of our decisions are made through an electronic underwriter. So it's not someone actually looking at that application, determining your race, your sex, whether you're a single parent or anything like that. The computer is actually making that decision. So in a lot of ways, what I knew to be a fact before, because I actually worked in that environment where there was subjectivity in that lending decision, it's no longer there. That said, there's still a lot of opportunity to make some adjustments in the process so that we can reach more low mod buyers and minorities who, to me, do require some special consideration or adjustments when you're analyzing them for whether or not they can qualify or be successful as a homeowner. That is not built into the system.
So Diana, you just touched on some of the lending practices today, and it would ask the question to the panelists: how do real estate and mortgage lending practices today continue redlining policy, and then also challenge to change redlining policies?
So redlining policy, what it did was it created neighborhoods where there was disinvestment. And that's what the policy did. So what you see in some of those neighborhoods now, many of them, is you see homes that have not been well maintained, property values have deteriorated. So even when you would have a buyer who could qualify for the loan, the home didn't appraise. It's kind of one of those catch-22 types of things. I mean, a lot of that is I think that's what's going on. So therefore, what you find people that they typically will maybe sell either they stay in the homes and the homes completely deteriorate, or they have to sell their homes and many times go rent because they don't qualify either for a home that would be higher priced. So they're in a situation where they can't fix up their home because it doesn't appraise, and the bank says, no, hey, you don't have enough equity, et cetera, et cetera. But then if they sell, which sometimes they're forced to do, now you don't qualify for a nicer home because of credit or, you know, whatever. So, I mean, that's kind of what I have observed.
Yeah, and we've seen this in here this year in some new reports and studies too that have come out. Attention, as Diana mentioned, has been brought to the appraisal process. There were certainly some major news stories over the summer about a mixed race couple who had attempted to get an appraisal on their home, and after whitewashing their home was able to get an appraisal that was certainly much higher than when the African-American female interacted with the appraiser, you know, in doing that. We also see this when it comes to the value of homes, where similarly situated homes, one being in a white neighborhood and the other being a Black neighborhood, are valued at lower amounts, just, it appears, for being in that Black neighborhood. And so that's what, you know, we can still see those type of disparities, you know, occurring here today. Diana mentioned certainly about, you know, online algorithms and different things like that, but that's also something too that we have to watch and be cautious for, because who's putting the algorithms together and developing that? Very often it's been white people, and it's going to reflect those type of items within there. And the algorithm then builds its knowledge, collects more and more data There was a report that was released last year, I think it was, about differences when it comes to car lending and the amount that African Americans pay more when it comes for purchasing a car, and going through that particular process. And so that data collecting builds that in and feeds that in. Well, this individual will pay more for a car. Maybe they'll pay more than for a home mortgage. So it's just things that we need to be aware of, and we need to watch, and we need to study, and we need to be cautious of, just to make sure that even online lending doesn't end up discriminating in some way.
Well, I have to honestly say too, just because of the length of time I've been in the business, that I think with the automatic underwriting, I have seen actually more improvements in home ownership than I did before, because you were really looking, the underwriter was human, of course, but it became very judgmental. And I can remember even writing letters sometimes, helping the buyers write letters, that they loved America and apple pie and all of that, just to make themselves look very, very good on paper, and just having to tell a story just simply because, it was so subjective. So I honestly feel that has automatic underwriting has really kind of improved. Now, not saying that Diana, because of the job that she does, can, massage and do whatever she needs to do after the fact. But I feel like it's been minorities buy homes, because it's kind of like a black and white thing. I hear what you're saying, Amy, I really do. There's some other changes that can be done that have nothing to do with the automatic underwriting. For instance, I don't know, we'll get into the student loan situations, but there's other factors that really still hurt minorities, and it's considered a barrier. I mean, it's a barrier. Well, I say barrier more than I'd say redlining.
I grew up before there were computers making loans. I mean, I actually went to loan committee. I was the underwriter manager, so I went to loan committee, met with the white guys, had to answer all the questions. And we did have loan committee once a week. And so I grew up and learned lending in that world. And that, I know, was when we did, there was a lot of, back to the subjectivity, the judgment thing. I mean, I remember underwriters looking at bank statements, and if you had too many purchases at the liquor store,
mm-hmm.
you had a good chance of maybe your loan not being approved. Now we go to not how can I make this loan? Now we're looking for a reason to deny the loan because we don't like it because of some of your behaviors or activities. I mean, that was going on. So in today's world, because that no longer exists, thank God, we're not into a lot of discussion around subjectivity. I mean, it's black and white rules. We don't have to make our case as much because manual underwrites, which is what those are called. Most lending is done automatically, but manual underwrites, some companies don't even make those kind of loans if it requires that amount of that type of a decision. What I can say, I mean, I am a lender at heart. I pull a lot of credit reports. The vast majority of my clients are African American. What I see as an issue more than anything is the credit piece. I do see that as the credit piece, and I also know by talking to my customers, because I do a lot of talking to them, a lot of it comes from not understanding credit and how you manage it and how you maintain and have a good credit score. So I don't see that overt discrimination again. Now, what I do see again are the policies on the lending side, and mentioning student loans, Janice, I have a real problem with a person not being able to buy a house because they have student loan debt. I feel like we all have to live somewhere with our debt, whatever we have. And maybe I can't buy my dream home because of student loan debt, but because of the way we have to calculate a payment on student loan debt, regardless of what the payment is for that borrower, we have to use a completely different formula that is typically 1% of the outstanding student loan debt. The borrower may be on an income-based payment plan. They could be paying $0 per month. They could be paying $20 per month. They could be paying $100 per month. But if their student loan debt totals $30,000, then we've got to use a $300 a month payment. Doing that, so this is regardless of credit score, this has nothing to do with credit. Doing that alone could kick that debt ratio over the limit and disqualify that buyer. I have a huge problem with that. And we already know that African Americans have the most student loan debt. We know that is a fact. And so if you consider that, and then you put a policy in place that automatically then causes you to deny African Americans for home ownership, to me, that directly impacts this home ownership rate. But also, you almost have to be inside to know how banks work and how lending works to know where the problem really is. Looking from the outside in, I don't know that you can really tell. But where the issues are for me are with the policies.
And from the National Association of Real Estate Brokers, they did make some comments about that, saying that student loans used to fund college education affecting homeowners' opportunities. For Black college students, 86.4% have some form of student loan debt. So, that's exactly what Diana is saying. And who is it affecting? It's affecting us. So that obviously is a problem. So we're trying to stay in school to help a better education and help to get, a better job. But where is it putting us?
Yeah, that kind of can really mess you up. And it's very hard to have a conversation with these young people who are trying to get great jobs and good footings and establish, home ownership and start to build wealth and make a really a good decision about becoming a homeowner. I mean, and rent is $1,000 a month. So how could it be better that if rent is $1,000 a month, how could it be better that person be forced to stay in that rental situation when in fact they could possibly buy a house and have a lower monthly mortgage payment and really put themselves in a better financial situation, all behind a bogus number. The number is not even real. So as you can tell, this is my hot button. So I'll stop.
Right. Yeah, it's also saying that 33% of African Americans' bachelor degrees recipients owe $40,000 or more in debt, compared with whites who have 18%.
Yeah, and I put it into chat. There's also a story just looking at, Diana had mentioned this, a credit score. And is there bias in a credit score? And when we look at, that credit score is so important when it comes to being able, to purchase a home. But does it take, into effect, how much, as Diane mentioned, you might be paying on rent each month, making those payments timely, but yet may not fully impact your credit score. Why don't you get, points for that? Because you were actively, paying your rent on time, and it was more than what, your mortgage, might be. So, there's been, looking at even how, credit score kind of came to be. And of course that we know, because of the history of redlining, because of other discriminatory practices, that shows that the difference in the home ownership rates, well, then you don't have wealth that you can pass down. And I know that when I went to purchase my first home, and I didn't have 20% down for down payment. And I was kind of told by the original mortgage officer I went to, well, you can get funds from your family. I'm like, well, how many of us have the ability to have family give us funds to help, with a down payment or with closing costs or things like that? And if you are someone who has been shut out of the home buying process for generations, and then has not had that wealth that's been able to be accumulated through home ownership passed down to your children and to your grandchildren, you've missed out on that opportunity to build that wealth. You're going to be coming into the process in a hole very often that is completely out of your control because it's based upon these former discriminatory policies still impacting our neighborhoods and our ability to get homes today.
I totally agree. I totally agree. And even though that's not necessarily the intent, I still feel like somebody needs to be looking at the consequences of the policies. It may not, before I don't know what the intent was. Redlining, I don't know. I know it was wrong, but I don't know. But I know now, I don't quite get the student loan payment thing, but I do know that when we talk about the Black home ownership rate, that is a biggie right there. Again, credit is a biggie simply because folks don't understand it. The other thing is we are still dealing with, Janice and I are still dealing with first-time home buyers who are the first folks in their whole family to buy a house. We're dealing with buyers who don't understand that buying a home is how you can create wealth. That is something, they just understand buying a home and the importance of it because I want to stabilize my family. So this whole creating wealth piece is new, equity is new, all of that is new, and because their parents, grandparents, and so forth were not in a position, they didn't own their home, so they were not there to teach our buyers on the importance and the value of owning homes. So a lot of this is very new. And because we've been shut out, you have a lot of people who have a lot of fear around home buying. They don't even understand how to get started. I don't know if there's been anything written about it, but there are very few Black loan officers in the management teams, very few Black or people of color running mortgage companies or banks who are able to weigh in on decisions or guidelines of the development of guidelines. If you're not represented, your culture, your value systems, your whatever, if you're not represented when the rules are being made, then you're trying to fit yourself into the rules. Yeah, and then when the question comes, why is there such a gap? It's kind of like one of those things where, you want to say a few colorful words to explain why there's such a gap, because it's obvious there would be a gap if you've not been considered when the rules were written. The thing with credit scoring is utterly ridiculous. Now, there's not one thing that is ridiculous in this whole thing is credit scores. Again, I talk to hundreds of people every month. I pull hundreds of credit reports and I'm talking to hundreds of people. 90% of the people who call me think they know what their score is because they got it off the internet. They're paying for it. They're getting it on their credit card statements. They are signed up to these websites that track credit. None of those scores are the scores we use at banks. And so why is that? I mean, and that is, again, a big factor when it comes to folks get discouraged, they give up, they feel like this is not meant for me, and then they back out. Mm-hmm. And that just shouldn't be. So a lot of people don't even participate in the process because they feel it's rigged, they don't understand it. And the whole time I thought my score was 670 because this is what the credit, my internet is saying. And then you now have told me it's 620 and maybe I don't qualify for a house. I mean, that's the reality of a lot of our people.
Right. Yeah, and the barriers, I mean, there's certainly other barriers also, affordability, and we talked about down payments where they have bought in, hey, it's 20% down. Where would I ever get 20% down? Things of this nature. Also, just not having any kind of access or just knowing about down payment assistance. And to be perfectly honest with you, I have heartburn over the realtors that do not know anything about down payment assistance programs. I have a real heartburn behind that, because again, you would, all the minority or Black realtors aren't necessarily, we're not working with, there are other, whites are still working with a lot of us. And when I go to closing, with if it's my listing or what have you, you can see the difference, what kind of loans that they're pushing them for. They know nothing about the down payment assistance programs. And that really does give me heartburn, and it really does. I'm also very concerned about the newer minority realtors that are getting into the business. I mean, there are a lot, minority realtors have been definitely increasing, but they know nothing about down payment assistance. One of the things that, and this is because I'm probably just a little bit more old school, but when I even first got into business, I can't even remember how I met up with this one particular lender, but she kind of took me under her wing where I started understanding different kind of lending programs. And that way it kind of helped me understand too, for my client, what might be best for them, or just being able to answer questions so everybody's saying the same thing. But, and of course, I've been working with Diana over 30 years. So I pride myself on really knowing a lot of the different products to help with, with the, whether it's a new home buyer or a second home buyer. I think we should just kind of know what's going on. There are a lot of realtors that stay in their lane. They don't want to know. They want the lending a person to make all the decisions, and I get that. But have some kind of an idea of what's going on, so that if you can't work with this person or help this person, you just know something. But a lot of realtors don't want to know anything. They just want to sell a home. So I don't know how to. I share kind of some information when maybe a realtor is asking me a question and, oh, I didn't know about this, or because in the past when Indiana Housing started lending, they've always done down payment assistance, but they had a system that probably took a little longer, maybe 40 or 45 days. And of course, that was just, oh, we don't want to work with those. We don't want to work those lending products at all. And so they still have the bad taste in your mouth. So, you have to really be able to not say anything. They're just going FHA. Don't tell them anything, because they're going to assume, that this particular type product is going to take forever. Diana and I are seeing, and of course, Amy, we brought this, I know you're seeing it too, that Diana and I are seeing more, and especially me, we're in the with realtors, we have a sheet, probably people know that's called the MLS or BLC, but it also puts down the type of financing that could possibly go with this particular home. We're seeing omission of government loans, of FHA and of VA. And I challenge it every time. Why are you doing this? Because who is that leaving out? And I really ask the realtor, what's up? Well, then in their opinion, VA is going to be low on appraisals, or the government loans are going to take 40 to 45 days. And of course, these sellers are just hot and sassy because it's a seller's market. So they don't care. I mean, they want it closed in 30 days. Sometimes I have to really ask Diana, can I get this loan done in 25 days just to be able to, get the loan, maybe that purchase agreement accepted. So that bothers me quite a bit. I have talked to put in something in writing for the Board of Realtors just to kind of see what's up with that. So
because
a little heartburn for me.
Well, that brings us to another question about how can we, what policies can we change to correct these things? What policies can mitigate the damage of redlining and discrimination in lending and real estate? Are there any recent local or state regulations that have helped with that?
Well, certainly, Andy, an opportunity for you to certainly tout a program that you are familiar with here. But I believe there is also a question, the Q&A, that kind of weaves into this when it comes to issues around displacement. So within our General Assembly each year, Representative Pryor introduces a bill dealing with property tax abatement, or typically it's worded in a way where individuals have lived in a neighborhood that suffer from disinvestment, appears to be so-called gentrifying, and now taxes might be pushing that individual out of that particular neighborhood. That bill would protect that individual and allow them to continue to live in this neighborhood that they lived in when it had crumbling sidewalks and they couldn't get the coffee shop to move in, et cetera, within there. Unfortunately, that bill never gets a hearing every year. It never gets a hearing. If it gets a hearing, it never makes it out of committee. And so there needs to be more calls to legislators to do some effective policies. We need also adequate homeowner repair programs. Again, that individual who lived there, Diana mentioned this a bit ago, about they may have wanted to fix up their home, but they couldn't get a loan because it wasn't going to appraise for what, you know, the loan was going to be for. And so their home has potentially, you know, issues. They might have code violations at this point. Again, we need to offer programs, and some of those are being offered in communities, but they're not at levels that are sufficient to help people who are truly at risk, you know, of displacement. I would like to certainly see, you know, more down payment assistance, more type of those programs, financial literacy type programs. CRA is currently, you know, being debated at the federal level with some changes that my organization does not agree with. We'll have to wait and see if that, you know, continues. That I think would have a negative impact as well. And of course, you know, there's always a good time to discuss reparations. And the movements certainly are the attention that is starting to be brought around that particular topic, because how do you make up for all that discrimination that occurred? We need to have a candid discussion about reparations.
I'm all for the program for the renovations, and reparations too. But for, you know, when it comes to the lending side, definitely for the renovations. I just think that if you have a lady I know dear to my heart right now, she lives off of 35th in Meridian. It's been in her home 50 years. She's probably in her early 80s, and her home is in need of repairs, but she can only get so much done through like an INHP type of program. She needs a lot more done. But she's going to be one of those homes that eventually she's going to have to sell it as is. Where she's living is right off of 35th and Meridian. So you already know who's going to buy it, what's going to happen to it, and how it's going to be resold, you know, flipped. And it shouldn't be that way. She should be able to, she's lived in the home forever. She has a good income. She should be able to get the money necessary to renovate her home and make it still nice for her to age in place. And we're going to have to develop programs around that kind of go beyond this appraisal issue. We've got to throw out the appraisal issue. It's got to be one of those things where if you're talking about safety, structural, those kind of things, sound properties, improvements that are needed to keep property in good condition, then we need to be a little bit more flexible when it comes to those guidelines. The other thing I wanted to mention also when it comes to a barrier to home ownership, and this has been recent in the last few years, it's a thing called an overlay. And an overlay is a requirement that a particular lender has when it comes to approving loans. Unfortunately, when a person is denied by that lending institution because that person did not meet one of their overlays, one of their requirements, on the denial letter, it does not specify that this was a reason for denial that was unique to this lender. So as a customer, if they've been denied for a reason, say the credit score, this lender requires a 680 score and this score was 660. If the customer's been denied for credit score, most people, low mod minorities, feel like they can't get a loan from anywhere else. And the denial letter doesn't say this is unique to us. You know, you may want to try another lender. You just have to imagine all the people that are applying for loans through Rocket Mortgage and all of these automated systems. There are thousands and thousands of people, and there are thousands and thousands being denied. And they don't know why or how to get around the barrier or if they have other options. So then they become renters. Some people, and I would say African Americans and minorities, immigrants, they will, if they've been denied, they're going to go back into renting. That is enough for them to have fear around continuing that process. And there's nothing out there or no one out there that can say, hey, you might want to try this bank across the street. There's no place for that information. They don't get that information from any place in the process.
And Diana, you have certainly schooled me on this, because who would know the difference between banks and mortgages? So Diana has always shared, well, banks have a different level of expectations, let's say, for lack of a better word, in mortgages. So when that's the same thing when she's, talking about the overlays. And then a mortgage company may not have those same overlays. I just didn't know that. I mean, I didn't know banks, they have, they're governed, I guess is the way that they're governed. Would you say that, Diana? Their policies, but how their policies are different?
Right. Yep.
And I added, I recently, the Fair Housing Center recently did a webinar on fair lending. So I had a lot of links handy. So I put a number of those different links in the chat. So some different reports answering, some of the questions there. A quick plug, we will be doing a housing's impact webinar in early December, as well as a sales and housing discrimination webinar in December as well, that people can sign up for if they want to learn more on those subjects too.
I want to get into some of the questions from the audience. First one here, what can be done about smaller home loans? This person has some anecdotes of people wanting a $20,000, $40,000, $60,000 loan, but then denied for those loans.
That is true. That is a very real issue. I totally understand the question. I don't know the answer. The reason I do deal with origination, so I don't deal with policy, but my understanding is on the smaller loans, the reason why banks and mortgage companies don't like to make the smaller loans is because we run into a problem with the federal government when it comes to maybe APRs and things of that nature, annual percentage rates. And because there's a cost to do a loan, whether the loan is $20,000 or $200,000, and that cost, if it's normally around $2,500. And when you think of that amount, that charge on a $20,000 or $30,000 loan, that's considered exorbitant. And so a lot of lenders just have minimum loan amounts so that they don't run into those problems. There definitely can be something that can be done about it. I don't know what that is, but that is a very real issue.
Yeah, there was, I'll try to find it. There was a recent article. I know we put it through our social media, but I couldn't find it on some quick searches. There's also a profit issue, I think, for the lenders on the smaller loans and servicing them over longer periods of time. At one point, I believe, if I'm remembering right, several years back now, over 4 years, CFPB was having, the Consumer Finance Protection Bureau was having some discussions about this area when it came to small loans. And then unfortunately that went to the wayside under the current administration. And I think there needs to be more discussion because we've certainly seen a lot of activity at the federal level when it comes to increasing the ability of higher priced and bigger payday lending loans. Mm-hmm. So, if that appears to be okay, where people are paying, loan shark rates on those type of loans, then we certainly should be able to have a discussion as to how we can do smaller mortgages that are fair and able to get somebody into home ownership, and also gets those homes occupied that are likely sitting vacant otherwise.
Totally agree. And the other thing, what I really like about what you said, Amy, was the borrower needs the money. I mean, if they're buying a home or refinancing or whatever, and they're okay with paying the money, the $2,500, if they're okay with it, it's going to serve their needs and they are a good credit risk, why not? What's the point? You can't tell people, you have nothing to put in its place either. Even if you're saying we won't make a smaller loan, but we don't have anything to offer you in its place. I mean, that's kind of messed up.
We have another question getting into the issue of gentrification. Mentions indie neighborhoods like Fall Creek Place, Old North Side. I would add in Cottage Home, the Near East Side, and I got about 10 other neighborhoods I could add to that list. The question is that it seems that longtime residents are being driven out due to economics, property taxes, insurances. Diana, you'd mentioned deferred maintenance and needing money to save their home. What, if anything, is being done to keep residents in their neighborhoods and create more ownership opportunities, particularly for African Americans who have lived in these neighborhoods for a very long time and seen the bad times and now would like to stay and enjoy the good times as they're revitalized?
Well, we kind of talked about this a little bit earlier, is that, there are, some efforts out there, but they just aren't going anywhere. I had mentioned previously, Pryor's bill, Sandlin, I think, had a bill, last year as well, dealing again with that property tax abatement in so-called gentrifying areas. The home ownership repair programs are not adequately funded, so people, again, have the opportunity to stay in those neighborhoods, get their homes fixed up, because they've earned that. They've earned that, being a write-off grant or no-cost grant on that. But there's certainly, other cities are exploring and looking at different things, especially when it comes to, affordable housing. Here in Indiana, however, we're restricted. The Indiana General Assembly a few years ago passed SB 558, which is one of the bills on our bad bills list, by the way, that really restricted, really banned inclusionary zoning. And that took a lot of things out of a Indiana city's toolbox that cities across the country are able to use, where they could mandate some affordable housing development. Currently in Indiana, they have to incentivize it instead of being able to mandate certain things. Very often when a city wants to do something that is viewed as aggressive or potentially even progressive when it comes to housing policy, too often me as an advocate feels that the industry goes to the General Assembly and gets a bill passed that then limits the ability of the city to really effectively even have discussions, let alone take action to do things. So again, I come back to, we really need people talking to their state legislators, talking to their council members about needs in their community, because we get pushback when we're advocating for policies that they haven't heard about problems in these areas. So people need to be talking to their legislators.
Another plug for Fair Housing of Central Indiana and advocating for policies. Please follow their social media, sign up for the newsletter so that when these bills do come up, when there are opportunities to contact state legislatures, you can be in there and we can get them all the letters they want. But that gets Amy got into our next question a little bit. For the panelists, what type of affordable housing options can reverse declining home ownership rates and mitigate the racial wealth gap? And then there's some follow-up questions to that. I'll read those now. Who decides what is affordable? Amy, you just addressed this, cities being restricted due to legislation. And then if you could get into a little bit about the industry lobbying against inclusionary zoning and against more affordable housing.
So I'll jump in quick here first before we start running out of time, is I want to put a plug in too for the Hoosier Housing Needs Coalition. That is a coalition that my organization is involved with, the number of other organizations that's going to be working in next year's General Assembly to try to get better housing related policies that are more consumer driven, whether that's renter based or home ownership based on there. Just because of time, I'd encourage people to, I put a link in the chat to visit our public policy page, where we really walk you through some of these bad bills that have been passed that have really limited the ability of cities when it comes to substandard housing, inclusionary zoning, being a number of different areas. Take a look at that, contact me with questions. As far as what can be done, oh my gosh, I mean, there's if we could wave the magic wand, get what we want. I mean, there's so many effective programs that have been discussed, that have been tried to be passed and just don't go anywhere because it's viewed as either a handout or giving somebody something that's, you know, free. And that isn't what this is about. We want our neighborhoods to be stable. We want healthy neighborhoods. We want people living in healthy homes. So we need to have, and I really hoped with the racial justice movement and COVID as well, that it would really show how housing really is the basis of everything. And we need to, you know, housing just has not been talked about at the national level at a degree that it warrants. And I'm hopeful that maybe that's going to change here soon. But I'm also, you know, a realist that maybe it won't. And we need to continue to push and advocate to get better programs and policies in place.
I think Indiana remains one of the more affordable states in the union. So from that standpoint, I mean, I'm not seeing a lot of problems. My bigger issue is folks need to learn more about credit, and then the student loan issue. I mean, it is a big issue. I would say 20% of my denials are due to student loan debt. And otherwise, if I didn't have to factor in that payment, that's an artificial bogus payment, then that would be the folks that I could have approved. And they can afford the homes because we still do have affordably priced housing here compared to rent.
Well, one of the things I noticed with INHP, and well, Insight was also doing this for a while, but they haven't been in the Riverside market for a while. But they were trying to do at least 50 homes within the next 5 years with the Riverside area. And pretty much what they were dealing with was 80% of the 80% of median. So household size, you know, that was 44,750. Household of 2, 51,150. So that was their way of trying to help the low to moderate income get into obviously good housing, you know, whether it was new housing or whether it was rehabbed. INHP did a little bit of the 80% median, depending on the price range right now. They're doing 120% of median. So the one household of 1 would be 67,000, household of 2, 76,000, just to also encourage homeowners, new home ownership in the Riverside area. And it's working, and it's working. I know some of the portfolio lenders have also their income issues, but also there's a lot of things that goes on with their lending, and what Diana says, overlays, that still is a burden and it still is a barrier. But that's another topic.
Yeah, another show. Yeah, another night.
Another show.
Well, I think we could go on for a couple more hours. One last question I'd like to get some short answers on in the last couple minutes that we have. It's about online lending and using IA to judge loans. Do these methods still perpetuate discrimination? And why don't these methods help to achieve more home ownership?
I don't see the discrimination in those those methods, because everybody's treated the same. I mean, the data goes in, you push the button. The problem is not in that process. The problem is with the credit, you know. But the way the decision is made, it's made the same for any and everyone. It doesn't. There's no race or ethnic, you know, factor in the process, from what I see.
So Amy's the pesky advocate, and she, you know, still has some concerns about online lending. I did put a study in the chat that, you know, raised some concerns because it's who, you know, built the program. So Let's hope Diana is correct and it's not happening. I do have my concerns, and we will continue to monitor along with fair housing groups across the country.
And that's a good thing.
Janice, any final thoughts before I wrap it up and give it back to the Historical Society team?
No, I will say that the Board of Realtors has come up with some policies that makes me feel very, very, very good, and it is really addressing the minority home ownership. So that was just presented to us last Friday. So that goes to show you that, you know, since we are talking about the Metropolitan Board of Realtors, which I'm telling you right now, that would be close to, I would say, almost 10,000 realtors were they're involved in. But there are some policy changes that they are making. Now, I'm anxious to see how that's going to be done, but it does seem like they're committed. If anybody would like to see exactly, I would be glad to send you that proposal.
That'd be great. Maybe we can get that out to the email that goes out after the show with
I'll get
links and
that to you.
information.
I'll
Excellent.
get that to you.
Okay.
You too, Amy.
Well, tremendous thank you to our wonderful panelists. It's been a pleasure to listen to you. Thank you for sharing your stories and your wisdom, and thank you for your work. I want to get in another plug for continuing to follow this issue. Follow the housing advocacy groups, Fair Housing Central Indiana, Facebook and Twitter, Homes for All Indy on Facebook and Twitter. At Homes for All Indy, we are working to move the local policy arena to address the historical injustices around housing and property. We believe that our scarce development resources need to be focused on our lowest income neighbors. Those neighbors might not be able to buy a home in the next 5 years, but a safe, affordable, stable house or apartment now will allow them to save money and to transition. It'll also allow them to remain in their community and take advantage of the tangible financial benefits of their social capital. We believe that affordable housing should be permanently affordable so that we don't lose those precious resources to the market in 5, 15, 30 years. We need to remove some of our properties from the market and keep them off of the market so that communities can stay together and we can have truly economically diverse neighborhoods. And our low-income neighbors can stay to enjoy the new parks, the good schools, and the new bike trails. So thank you all the attendees for joining the conversation tonight. Thanks again to the brilliant Jordan, Callie, the team, Indiana Historical Society for putting this excellent series together. And finally, we need to create communities where people are safe from police violence and safe from police riots. Black Lives Matter, and we have to prioritize people over property. Thank you. Back to you, Jordan.
Thank you, Andy. I'm a big fan of all of your work, and Andy too. So it was really nice to have you all together tonight to just sort of bounce ideas off each other. And thanks to everyone for joining us with your questions and your comments. I really hope these conversations will continue between all of you. You can check out our website for more information on upcoming programs. We're going to launch the follow-up poll now. Go ahead and answer that. So you will get an email, follow-up email from us tomorrow. So we'll have 2 brief surveys. One is from the Indiana Historical Society, and one is from Spirit and Place Festival. We'd love to know what you thought and how we can make programs better in the future. As Callie mentioned at the top of our program, this program is part of the Spirit and Place Festival, which is about halfway through. So you can find out more information about the rest of the upcoming programs at spiritandplace.org. We'll post this conversation to the website in the upcoming weeks. And if you want to catch the replay sooner, please find the recording on our Facebook page. Thank you. Stay safe and healthy out there. And I can't wait to see you all in the future. Solidarity.
Thank you, Jordan.